Today's top three things this morning in my notebook. Number one is going to be oil. Number two is going to be Russia. And number three is going to be the Japanese yen. So first on oil, if you didn't know, now you know. It's called deflation's dominoes. So again, dominoes fall through countries, and then they fall through energy markets, and then they ultimately fall through your portfolio. So for those of you that are long only of bonds, here in December, your net wealth has gone up. If you're long literally anything else, you're losing net wealth at this point. And again, wealth preservation starts with what? Not losing money. So again, oil's downside, immediate term downside, that is, in the risk range, we now have it at 53.27. Immediate term upside in the range is to 61 and change. So again, you're just getting a series of lower highs and lower lows in the price of oil. That is bearish, obviously within the construct of an epic crash, down 50% now, the oil price since June. And no, we don't think it's different this time. Number two, Russia. Now, I think for those of you who've tuned into us for a while now, it's been about 6 months since we've been calling out Russia as a big domino in the deflation game, in particular linked to the petrodollar pain that Putin will feel if indeed the oil price goes down at an expedited pace. Now, of course, you can see that now. Mainstream media will cover it in full as new news today, which is, of course, not new. And again, your job is to risk manage the noise of it all in the face of the Russians really doing what central planners are going to end up doing in the end, which is providing a central plan for markets that simply is not believed. So again, the central plan was this. The Russians raised interest rates by 650 basis points, ostensibly to protect their currency. The marketplace turned around and said, nope, we're going to sell the currency on that. And now we have a full-blown currency crisis in all of its manifestations, really. And again, this is all about expectations. So if you didn't know how the central planning game ended, now you know. Now, finally, the yen. You have to watch this one very, very closely. A lot of people think that this gigantic central planning experiment in Japan is going to work in economic terms. Of course, that is cockamamie. And again, if you look at what's happening in the currency market this morning, it's not just about the ruble. For God's sakes, let's open up our eyes and look at the dominoes. So again, what you're seeing is people chase or really find liquidity, and they're buying yens. They're covering yens. They're buying yens. Don't forget that there is an extreme amount of pain in global macro portfolios. People have to get liquid. And when they get liquid, one of the biggest liquid currencies out there that people are still very, very short, and we will be looking to reshort the yen, by the way, on this strength, is the Japanese yen. The problem with the yen going up at that pace is that the Nikkei goes down. So the Nikkei down 3.6% this morning in a straight line. Could be an opportunity on the long side, by the way. So again, don't be dogmatic. Keep moving, and those are your top three things.